Some retail stocks have gone down and many have failed. Where can we look to find some potential winners? What companies are working with their employers to help them through this? Let's see what stocks can be profitable. Here's a retail stock that just keeps on retailing. This was another stock that was in our hot panel this week. Our hot stock panel. Dollar General targets a higher end shopper in the suburbs with a new store, Pop Shelf. That's interesting. Dollar General has been making money hand over fist during this time period, even with people going to the store during COVID-19. Interesting thing about Dollar General is that they are in every nook and cranny in the country. You could be driving for like 30 miles and don't see anything, and all of a sudden, boop, there's a Dollar General. Dollar General looks like they buy up every nook and cranny of space around the United States, and there's a store. All right? But listen, they're making money. And I like this idea, higher-end shoppers in the suburbs. They're already making money. What are they trying to do? Make more money. All right, Dollar General is launching a new store, Pop Shelf, aimed at wealthier customers. So you know something? They may not be the Walmarts or the Targets of the world, but they might be trying to put out a little store to at least go after the Walmarts and the Targets of the world. Interesting. It will feature home decor, beauty items, cleaning supplies, party goods, and more, with the majority of the items costing $5 or less. Interesting. Higher-end shopper, that means they got some dough. There's still going to be an appeal to buy less for less money, right? How do rich people stay rich? They spend less money. Think about that. That's how Joey stays rich. Well, Joey's not as rich as me. Wow. You know, it's not debatable. You ain't as rich as I am. That's all I'm going to say about that. But interesting how Dollar General's plan or model is they're already making money. Why not make more and go out into the suburbs where people got money and still go at them cheap? Why not open Million General instead of Dollar General? That's kind of funny. You even got Joey laughing on that. That's kind of cool. That's kind of, instead of calling it Dollar General, let's call it Million General. Heard Joey is a millionaire. You heard wrong, Peter. Well said. Terminal sandwich. Huh? It's way more than that. Whatever. Joey doesn't know. Eventually, the government stimulus must end. I don't disagree with that at some point in time, that the stimulus is going to end. When people start, when more and more people start working, they're not going to need the stimulus. But as they're still not working, they probably still need the stimulus. But at some point in time, you're going to have to stop it. I hear that. All right. So I'm looking to see, another story. Domino's Pizza. Domino's Pizza drops as compensation hits profit. Why is the compensation hitting? Well, people call out sick. And if you got medical, you got to pay for it, right? So Domino's drops its compensation sits. Domino's sold a lot of pizzas during COVID-19, and they helped themselves to a slice of the pie. Beautiful. Profits missed expectations because of higher variable performance-based compensation and enhanced sick pay for frontline workers because of the coronavirus. So yeah, a lot of companies thrive during coronavirus, but they put their people, don't hit me up for this. Well, Glenn said that they put their people up in front of them. Listen, the story says these people got to work, right? And they got to work around each other, right? Which increases the probability that they would get COVID-19. And by that, if you're offering some kind of a medical plan, you got to pay for that. And I think that that's what hit their earnings. All right, even though they were delivering pizzas, Joey, if you look at Joey must have been buying Domino's every night. I mean, and then some. I'm looking at Joey. I'm like, how many pizzas did you get? A lot.
You
I know.
Sit a lot closer to that desk if your belly wasn't so good.
My belly not that big. I got sexy belly.
You be way closer to the camera.
No, this is sexy. That's not so sexy. All right. So with that, they made money during the COVID-19 because they were delivering pizzas, that was great. but it took a little bit of an effect, a toll on them with people contracting COVID. And this is a story I really like. Lowe's. And I happen to be a Lowe's fan because I'm a NASCAR fan and I'm a Jimmy Johnson fan. So Lowe's resonates with me. And Joey, on the other hand, is a Smoke fan, which was, he did drive to Home Depot. Yep. He did. That was Tony Stewart. He drove to Home Depot. It's very interesting how I will go out of my way not to go to Home Depot to go to Lowe's because of Jimmy Johnson. But this cool story is Lowe's gives $100 million more in bonuses to hourly employees. Why? Because they made a lot of money during COVID-19. It will give $100 million more bonuses to hourly employees in mid-October as strong demand for home improvement supplies continues. This is an awesome story that a company that was able to survive during the pandemic is paying their employees who worked through it. That is awesome. The retailer paid more than $675 million in additional pay to employees this year, including the latest rounds. Folks, not every company is able to do this, but when a company as big as Lowe's can do this, that is awesome. Home Depot thrived during not survive. Home Depot didn't go out of business. Not that I know of. They didn't go out of business. Lowe's also announced a cash tender offer to up to $3.5 billion of outstanding debt securities. That is just a cool story. Is Costco a good buy? Huh? I am. We'll see. Boom. All right, so I like that story. That was a feel-good story in the place of retail. All right, so let's go look at them. Look at where Lowe's sits in my list. Number 1. Look where Dollar General sits. Number 2. Look at where Domino's sits. Number 4. Remember, these stocks are listed by our master indicator, VST. These are some of these retail stocks during COVID-19 are some of the best stocks in the list. Upside potential, really good on all of them. These companies keep meeting or exceeding their earnings expectations with high relative safeties. Domino's is not going up as fast as far as relative timing, but Lowe's and Dollar General are. And all three companies are growing their earnings at a clip of double digits. So interesting. Let's go take a look at their graphs, view the stock graph. And guess what? Look at Lowe's, 3-month graph. Look at Lowe's. I love that feel-good story about what they're doing for their employees. I'm going to put a level of resistance. Take off the glass close. Put a level of resistance, style, make it a little darker so you can see it. Sitting at a value of about 171. The stock's trading at 170.55. I love that. Notice though, this is why this is important for your when to buy. 1, 2, 3, 4 times in or touching the zone of that level of resistance. I really want to see the stock's price break above that before I pull the trigger. Everybody in the room, type in the room if you understand what I just said. This is why I look for levels of support and resistance before I pull the trigger on the stock. That's a telling sign. If I'm going to pull the trigger on the stock, I love that it's above that 20-day exponential moving average. And the question is, I own Lowe. Should I keep it? Leave it alone, Mike. There's nothing telling me right now to get rid of it. All right? And that's what your stops are for, Mike. Use your stops to make sure, how you invest. That's going to actually tell you as well. All right. Any questions on my retail stocks? Any questions on that? Any questions?
Yet, but remind them to like and subscribe.
All right. Don't forget to like and subscribe. Don't forget to like. How many likes do we have?
100.
100. Let's see if we can get to 150 likes before we end today. All right. For all my new people out there, if you liked what you saw today, subscribe. Subscribe to the channel. And all that does is, and don't forget to hit the bell icon. That gives you an opportunity to know all of the new content that comes out. If you really like what you saw here, don't forget to like and subscribe.
Why 20 day?
Huh?
Why 20 day?
Why 20 day? For me personally, it's a good middle of the road exponential moving average or a good middle of the road moving average. 10 is for more of a trade. 50 is more for a way longer term, 15 and 200. 20 is a good middle of the road moving average for those people who are trying to swing trade or hold stocks a little longer than just a day. All right. So personally, I like the 20-day exponential moving average from that perspective, and I also like looking at a 3-month graph because that's always going to include the earnings picture on the stock, because earnings comes out every 3 months on the stock, and earnings is the biggest mover of a stock's price. All right. So I always want to watch that as well.